So now we're going to be looking at the subsidiary ledger, as I stated before. And like, what? Okay. What this means is that now in your accounts receivable, you know where it said before you have your Michael Reese or whatever the guy's name is? Here we go. Or Hal's this clothing. Okay. All those people are individual ledgers. And that's why your accounts receivable will be the total, and then your subsidiary is the individual persons that you are giving credit to making that total number. Okay? Don't worry. It'll be easier when I demonstrate it and when I talk about it here. Okay? So again, this is what we're doing, and they're posted to the general ledger as well. Okay? So here we go. So the accounts receivable subsidiary is this right here, accounts receivable. As I said, this is your controlling account. This is where you're going to get the totals of all of these people owing you money. Rowe, Mel's, House Clothing, the Bevins Company. You have to keep a tab of how much all these people owe you so that you can make sure that one, you're getting paid, right? You got to get paid. So that's what we're talking about. So each ledger is, each subsidiary ledger then has its own information. But notice, the total of the individual accounts will always equal the amount here. The total amount has to, okay? Because you're entering the information. So the transactions that occurred in April, notice there was a lot of them. We have accounts receivable for House Clothing, accounts receivable for Bevins. We have returns and allowances that came in, issued credit memo, accounts receivable on Rose Company, okay? Accounts receivable, Rose Company, sales and sales. Accounts receivable, Mel's, accounts receivable, Mel's department store. So everything that we went ahead and we sold has to total for accounts receivable, has to total, each individual one has to total the whole in accounts receivable. So when we're posting and recording the transactions, notice we still have the general ledger of accounts receivable, and then we still have the amount on each one. Bevins, Howes, Mel's, Rowe. We still have that. This is the controlling account. Okay? Then when the subsidiary ledger is updated, a check is placed. The reason that a check is placed is to let you know that, yes, I not only posted this to the general journal, I also put it into the accounts subsidiary ledger. So here we have accounts receivable, $800. This is the account number 113, okay? 113. This is the check mark because not only did I debit it here for accounts receivable, but then I also debited it here for House Clothing, okay, for $800. And then I also credited the sales, okay? This is the debit and the credit right here. This is an additional debit because you're placing it into the subsidiary ledger. Okay, no additional credit is done, just when the first sale is done. All you're doing is taking this information here, breaking it down, and saying this now belongs to Hal's Clothing. Okay? So, for all these people, notice 800 to, where was it? Hal's. Then we have $1,600 that went to who? Went to Bevins. We have $2,000 that went to Rose. We have $500 that went to Rowe again. You have $900 that went to Mel's department store and $700 that went to Mel's department store. When all of that is said and done, you still have the same amount of money. Okay? However, there's a credit here, which means that this is something that was returned. So we're now, or he paid. So he paid $600 worth of that amount right here on this day, the 12th. So you now credit accounts receivable. You credit his account, but now you credit accounts receivable. so that you have the exact amount of money that you're supposed to there. And actually, it was not a sale, it was actually a return. So we returned some stuff on this date, and notice you debit your returns. So you have to keep track of everything, that sales that you made, the amount of money that you made, but then you also, if you sold it but it was returned to you, then now you have to decrease the amount of money that he owes you and decrease the amount of money in your sales as well, and your returns and allowances, to make sure that, okay, this money is that was coming in now didn't come in because of this. Okay, you always have um, a record, a trail, an audit trail of what happened throughout the month. When you issue a credit memorandum, okay, that indicates that the amounts of goods were returned or damaged, right? When we return something to Walmart, they issue us a credit memo letting us know, okay, we're giving you either your money back, or and it's not really money anymore. They give you a small little gift card. So instead of giving you actual cash, they give you a gift card that you can use. And the reason for that is to decrease the amount of errors when giving money out, change. Okay, so this is what it looks like. Credit memorandum, we credited the account. Merchandise returned 60 Model 8 men's dress gloves for $600. 60 of them. So they were worth $10 each. So what that does, it's a contract asset. So the sales return increases, but the accounts receivable for Bevan's company decreases, saying that they don't owe you those $600 anymore. And why? Okay. So here we do this for the credit memorandum. So now what you're doing is you're now going in and you debit the sales and allowances, okay, posted to the sales returns, and then of course crediting his account, showing that it's been done, and of course it has been recorded into Bevan's, showing that, okay, he doesn't owe you those $600 anymore. Okay, when we're doing cash receipt transactions, that's journalized as we do for everything, but we also are posted to the that are returned to the accounts receivable ledger as well. Okay, so here we go. If they provide the funds, right? These are some of the transactions. So we received a check from House Clothing for payment of invoice, okay, less a 2% discount. So the sales, cash sales for the first half of April were $900. So here we go. What we're going to do is we're going to start recording everything that happened here. So here we go. Received a check from House Clothing, payment for invoice number 1, less the 2%. So the invoice was number 1, okay? The amount of money that we're getting is cash of $784. That's the 2%, okay? The sales discount is $16, okay, he's getting, because of the fact that he paid early, the sales discount right here. Remember, he owed you this amount. So now, instead of paying you the $800, he's only paying you $784, and the sales discount is recording where the money, the discount went, showing why you only got $784, and you're crediting his account because he paid early. You said, hey, I'll go ahead and give you a discount. I'll pay, you only have to give me so much if you pay me in 10 days. Better to have the $784 now than not have the $800 later on. And of course, then Hal said, sure, let's do it. Okay. So here are some of the things that you saw there of the things that were being done. The sales discount, the cash that comes in, another sales discount, okay? Paid on invoice number 2, $20 on 2% of the $1,000. Then the sales discount again, buying of the store equipment. Then of course, cash for sales for second half of April. So all of the things that are being recorded and journalized as well. This is so small, it's unreal. Let me see if I can bring it up. So this is what we're showing here. Bevins Company. Remember, $600 that he returned. Now the credit for the $1,000. So here we see then what's going on in accounts receivable, the bigger account. So we see where in the accounts receivable we had the $800. Okay, then we credit it because he gave us money. Remember, he gave us we're crediting the entire amount, even though he only gave us $764 because here we go for cash, $784, because of the fact that we gave him a what? A sales discount right here. Here you see the $16. So again, all of these transactions were recorded and done. And it's going to be a lot easier when we go through the demonstration of the homework so that we can do it each time we see what's going on. Okay? Oops. Bring that down again. So now, some of the transactions that recurred for April: $500 sold store equipment, cash sales, sold the second half of April, all the stuff that we went ahead and we sold. That comes in. Again, putting it in to your cash account, how much we got in, and making sure that we put it in where we actually sold it. Okay, store equipment. Again, all the stuff that we're doing is shown here. And yes, it is cumbersome. It can be cumbersome. You're like, there's no way I'm ever going to understand this. Don't worry. Don't get bent out of shape. This is what it's showing you, what it looks like. But when we do the demonstration, I'm going to take you through each one so that you can see how at the end of the month you end up with something like this because you're recording everything individually. Okay? Yeah, you thought payroll was rough. Anyway, so these accounts receivable, we see everything that's going on. Notice Mel's Department Store, the Row Company, total accounts receivable is $2,100. See all the stuff that's here. Again, the money that's coming in, how it's a total amount, how much we still have in accounts receivable because of these subsidiary accounts. Yes, here we have the balances because we debited the accounts receivable for $800, then $1,600, then the $2,000, $500, the $900, and the $700. So we have a total of $6,500 here of the debits. During the same time, we also credited, okay, they paid us here, they paid us here, or they returned stuff. They paid us here, they paid us here. So this is the amount of money then that we reduced as far as how much money was owed to us. So when you subtract $4,400 from the $6,500, you end up with the $2,100. And guess what? These are the people that still owe you the $2,100. So that everything then is correct. Notice, Bevins paid you. Notice, House Clothing paid you. So the only ones that still owe you are Mel's and Row. And guess what? Voila. It is still going to balance. It has to balance because you're recording it on a daily basis. So this is the chapter in a whole, all right? So in order for you to understand this, we're going to go ahead and be doing one of the homework assignments. I'll be taking you through it so you can understand what's going on. This is the 9th week now, okay, that we're in. We're almost to the home stretch, okay? You can do it. You can finish this out, okay? If you have any questions, don't hesitate to contact me, to call me, text me. You can text me and say, hey, my numbers are not coming out. When you text me on the text-free app, you can send me a copy of take a picture of your screen, show it to me, and then I'll say, okay, this is where you're wrong, or where this is where your error is. This is what you forgot to put or you forgot to put in, so that can help you understand what's going on, okay? So text me, call me. You can do video chat with me if you want to through Google Hangouts, either on Sunday or during my office hours, which is on Tuesdays and Thursdays from 1 to 4, except on Thursdays 1 to 3, I think. I don't know. Or email me and say, I can only text or talk to you or do Google Hangouts during this time. Can you make time for me? I will. I'll try to make the time for you if I can. And we'll find a time that we can talk together and chat if you need to. All right. Again, home stretch. If you need anything, please don't hesitate to contact me. And I'll see you on the flip side.